Good morning, friends. Today I am again before you to talk about price determination of various scripts in the stock market. You need to know whether the price at which you are buying is really suitable for you, whether the price at which you are selling is really suitable for you. For that, we need to know the basics of price determination in the stock market. In general, prices of all the scripts are determined by demand and supply factors in the stock market. How much demand is there for a particular script? How much demand is there for buying and for selling in that particular script? So, demand means buying. The buyers constitute the demand. The sellers constitute the supply for the particular script. There are thousands of scripts in the market, and for each script there are a number of buyers and number of sellers. The buyers have their own requirements of prices at which they will buy certain quantity. Likewise, the sellers have their own requirements on what price is required by them for selling their shares. So when the buyers and sellers come to the market arranges the buyers and sellers in the order of their buying prices and selling prices and tries to match them. In the process of matching the prices, many buyers are able to buy from many sellers because their prices match. The selling price, the proposed selling price of the seller matches with the proposed buying price of the buyer. Now, once these buyers and sellers are satisfied and they are away, the next rung of buyers and sellers come into the picture with their relevant prices. Either they may reduce their prices or up their prices according to the market conditions and sell. But the price ruling at present is not suitable for them. They may withdraw or they may keep for the day and wait till their price arrives. So this is the basic demand and supply. It all happens on the computer of the stock exchange, National Stock Exchange or the Bombay Stock Exchange. Now, is demand and supply the only reason for buying? No. The company performance is the main reason why the demand and supply actually happen. Now, companies declare their results every quarter, first quarter, second quarter, third quarter, fourth quarter. The first quarter results, that is April, May, June, are declared in July, August, September. And the second quarter results are declared, that is July, August, September quarter results are declared in October, November, December, like that. Each quarter's results are declared in the next quarter. Some companies declare very early, some companies declare very late. Now, when the results are declared, they are either positive or negative. Based on the positivity and the negativity of the results, the buyers will either lower or raise higher the prices at which they would like to buy. Likewise, the sellers, if the results are good, they may up the prices. If the results are bad, they may lower the prices. So the company results are a major factor in determining the upward and downward movement of the prices. And then there are company news. Companies give out substantial news, important news periodically of whether the company is expanding, what rate it is expanding, when the capacity expansions are likely to be completed, and so on. Based on this news, buyers and sellers start anticipating the next results, whether the next results will go up or come down. Based on the company's news on expansion, etc., or discovery of new products, new markets, and so new customers, and so on, the prices may either go up or go down. Usually they will go up. And then budget of the central government and the state governments is also another time for the companies to profit more or less. The taxes on individual commodities may either go up or go down, and some incentives may be introduced in the budgets also. So these incentives and taxes determine the fate of many companies. Based on that, buyers and sellers try to anticipate the prices of commodities, a fate of the companies itself, and thereby the prices of the companies either go up or down. Demand and supply will vary based on this budget views. Another factor is introduction of competition or extinguishing of competition. In China, they closed many factories on environmental safety grounds. That enhanced the prospects of many companies in India. So such things happen. Either competition is introduced or competition is extinguished. Based on that also, the fate of the companies, the fortunes of the companies change, and that also changes the demand and supply equations in the stock market. And then there are ratios of comparison between say 10 companies in the same sector. How do you say that X company merits a higher price, Y company merits a lower price, Z a much lower price? For that, the earnings per share is one of the criteria. If the earnings per share is the highest for a company, naturally that company will merit a higher price. The earnings per share of another company may be much lower for various factors. Therefore, it merits a lower price. And again, see the earnings per share we are saying, but the share face value itself differs from 2 rupees, for 1 rupee, 2 rupees, 5 rupees, 10 rupees, and so on. Therefore, to find out the correct price for share, the price earning ratio is introduced. Price divided by EPS. Then you can compare the prices more equitably and more logically. So price earning ratio is better than the earnings per share basically. Then price to book ratio is there. In some companies, a large quantity of assets are pending utilization, in which case those companies may get better prices if the company proposes to use the unused assets. Unused capacities may be there, unused assets may be there, which the company now proposes to use. So price to book ratio also comes into the play for determining the prices. And then there are circuit filters, market-wise circuit filters and script-wise circuit filters. When a particular company shares are in a very volatile mood, the market imposes a stabilizing upper circuit and lower circuit. It may be 5% on either side, or 10% on either side, or 20% on either side. This speech is not enough for discussing about the circuits, but when the circuits are imposed, they impose a artificial limit on the demand and supply factors, which will not operate in that case beyond the circuit limits. The prices you will have to compare based on your holding period. Your holding period may be long term, medium term, or short term. If it is long term, many of these factors may not matter. at any of the current prices you may be willing to buy. But if your holding period is a short period, then the price at which you buy matters. You must try to buy at a lower price if your holding period is short term. For a long term holder, there is no problem. And then prices are also determined by the compulsions of the buyer and seller. A seller needs urgent money, therefore he will try to sell at any of the existing prices. So if he wants the amount immediately, he will like to reduce his selling price to the level of the buyer's prices. Likewise, if the buyer wants to buy at any cost, he has some compulsions for buying a particular share, then he may try to match the seller's price. So many factors are there which determine the prices of the buyer and seller. Now, but remember one, for every buyer, there has to be a seller. And if a seller has to succeed, there has to be a buyer. Buyer's compulsions are different from seller's compulsion. Now, a buyer may feel that this is the most appropriate buying price for him, but the same price is the most appropriate selling price for a seller. Now, how these things are determined, and both may be actually profiting from the same price. The seller may have purchased 2 years back and may be on a profit level of about 200% on the same price. But the buyer today may buy and may wait for a 200% profit in the next 2 years. So both may be profiting from the same transaction of buy and sell. So I hope you have understood. Listen to this video 2 or 3 times to understand further, and try to understand your requirements as a buyer and a seller and profit from that. We will meet again often and often to discuss this topic a little more in detail. In the meantime, I wish that you subscribe to this channel and profit from it. Thanks a lot.